The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach, friends, do we go? And we're up 22 points on the S&P cash at 2074 with 2.5 billion shares on the New York consolidated tape. And what else do we have going on out here? Well, you know, the NASDAQ up and back over 5,000, by the way, up 113 points on the back of some huge earnings from the majors out there, as they say, the FANGs. And we'll talk about those today. But I got several things that we want to bring up that I talked to traders about today, and maybe it'd be nice to pass along to the rest of the folks out here. In the meantime, it's all about getting this party started.
That it's all just a little bit of history repeating.
And on this day in 1925, John William Carson, who will become known as America's longtime host of the popular late-night TV program The Tonight Show, starring Johnny Carson, is born in Corning, Iowa. As host of the highly rated Tonight Show, which aired on NBC from 1962 to 1992, Carson became a bona fide American institution and an entertainment icon. And I have to think about what we have today with all the different hosts on it. Even 10, 15 years ago, when it was just two hosts, you either had Letterman, who I couldn't stand, or Jay Leno, who I could kind of pay attention to. Both of them were horrible interviewers. I didn't much, it just didn't fit. Letterman's comedian, maybe it's a East Coast thing, just didn't like it much. Really liked the fact that Jay Leno was an equal opportunity person. It didn't matter who you were, political party, male, female. He would skewer people equally. And I always liked that about him. I met him a couple of times, just briefly. And, of course, met David Letterman. Let me put it this way. Stood in the same room with David Letterman and never really liked him at all. He treated everybody rather horribly. And Jay Leno, on the other hand, every time he walked in, he shook everybody's hand. The people that worked there, the guests, the people that actually cleaned the bathrooms. There was nobody he would not glad hand. And if you were talking about almost a politician / comedian, he pressed the flesh with the best of them and didn't mind, took pictures with everybody. I think you were lucky if Letterman didn't spit on you. But I don't know. Pretty horrible stories from Letterman. I always kind of knew it. It just kind of always looked that way. Anyway, when I think about Mr. Carson, the one thing was that you knew at 10:30, at least where I grew up, Central Time, that everybody was going to be watching Carson that night, and maybe he was going to have on the mighty Carson art players. Maybe there'd be a neat skit, or what's that gal, the blonde, would come on for the tea time movies. Oh, I love those tea time movies. And the Slauson cut off, don't cut off your Slauson, all those wonderful things. Joey Bishop was there was another host even before Joey Bishop. I think he was on there very shortly. Just didn't like all the rest of it. Yes, Steve Allen, but even another guy before him. There were several of them. I think it started in 1958. But there were several hosts before him, and of course he got it. Jack Barr. That's who I'm thinking about. Thanks, Mr. Engineer. But the one thing that you could say is we as a nation could come around the water cooler and with all our the Facebooks and Netflixies and our them tubes. Kind of hard for America to congeal around one thing. Even as late as 1990, the Seinfeld episodes, everybody would talk about those. And you just don't get that much of it anymore. So maybe I'm a little misty-eyed about Mr. Carson. But I don't know. Most of those guys have a pretty good ability, whatever it is, to really be liked. And I will always miss him. Of course, on Monday, we'll talk about earnings from last night and today in a little bit. But we got to keep looking out and forward. This market it's like being thrown in a river. You can't quit swimming. You got to keep on going. On Monday, before the bell, we've got Checkpoint Softwares and Lending Tree and Sohu. Now, Sohu's going to be very interesting. I was looking at when we'll probably pull them up and what the China news about them adding accommodation and lots of cash to China today is done for Win. But Sohu, kind of in that same thing. We'll take a quick look. But I'm wondering how much that's going to do for some of these down and out .coms of China. After the bell on Monday, we've got Broadcom, Cheesecake Factory, a favorite of Leonard's, Edwards Life Sciences Corporation, MicroStrategy, PMC, Sierra, Sanmina, and SolarWinds. SolarWinds, everybody thinks, every time I talk to somebody, they think it has something to do with solar. And of course, it has nothing to do with solar. It's a kind of a tech networking company, but and software company. But yeah, what else can you say? Ben and his reality. A little different today. Ben Bernanke is out lambasting people. He says it's ironic that the same people who criticize the Fed for helping the rich also criticize the Fed for hurting savers. Ben Bernanke told Financial Times Martin Wolf, and those two things are inconsistent. But what's the alternative? Should the Fed not to try to support a recovery? And I'm wondering what the true answer to that is. I think the answer is no. I think the recovery probably should be done at least somewhat through the political system. They should make sure that they have their mandates pretty much of usable inflation, a slight amount of inflation, and quit picking the winners and losers. Anytime the government gets involved at that, normally pestilence and destruction follow. But kind of somebody getting under his saddle, a little burr under old Ben's saddle today. But my guess is that he won't be remembered any more than his predecessor when history actually comes back and looks at the results over time. Maybe a little bit better in that he didn't cause the housing boom like Mr. Greenspan. And maybe he left in time to cement his legacy, but I don't see anything really physically changed. Probably the only thing is him getting fired and why he was fired, and that he would have started raising rates already. And probably the reason why he is not the FOMC chairman anymore. We had a few comments out here today that I was talking to traders, and one of those was, okay, what do we do? I'm looking at charts. I don't find a whole lot. I don't either. But I think you can go long some stocks and short others. But what we do have, and we're the 23rd here now. So we come back, it's the 26th. We got a couple of days before fund buying. That means that we've got probably a bullish bias all the way into that period. So if you're going to short anything, you really, it's going to be tough. There's going to be a very good bias toward the end of the year because, of course, a lot of people will not be in a losing position in the indexes. They will be in a losing position if they're in maybe the biotechs, maybe something like Tesla that they bought at the highs. There's going to be tax selling in those stocks that have already been hit, like the biotechs, like healthcare over the last few weeks, especially ones that have been hit just lately. And this will be to offset the wins that they have in other sectors. And if you're going to short some stocks, you might want to look at stocks that have already been taking a beating and look for some of that tax selling to come in before, pretty much before the last week, Thanksgiving. Most of it will occur to get in, especially a lot of these hedge funds and others. Their season or their window for selling actually is, I think, the last the 1st of December. Most of them, but it is it is what it is. But one thing on that, one of the other things, I don't have a slide for it, but I will bring it up, and that is playing options on Friday. I was in a discussion about when to sell the UVXY today. In the well, we sold it in the newsletter, but it was one of those issues where it opened up at what, 25.73, and I knew that it was probably going to get into that 27s and maybe into the 28s if we were lucky. Got to 28.78 today. But someone was saying, I wanted to hang on to it. I wanted to hang on to it another hour, and I think this is at 12:30 or so. And I said, well, we got to be selling this pretty much now. If you've never traded the VIX or VIX index, this is a perfect example of what to watch for on Fridays. And that is that options almost always will see a big tick down, and they tend to run in a pack. And most of it will happen in about 10 minutes on a Friday. And that is the premium for the weekend gets sucked out of it. And suddenly, of course, the VIX will drop. And of course, if you're trading any of these leverage products, they can too. But I said, all things being equal, you're probably going to lose $1. I think it was at 28.50 or something we sold. But it was all things being equal, even if the market doesn't move, you're probably going to lose $1 just into the weekend. And it happens so regularly that I thought I haven't probably talked about it or pointed it out in a while. But if you're looking at playing VIX options, just always know that you get to that 1 o'clock time, you got a few minutes before a lot of options are going to be sucked out. It also makes a lot of sense, too, if you're going to be buying puts for some kind of downside protection, or you actually think the market's going to go down. Not a bad idea to wait until after 1 o'clock if the market doesn't seem to be moving a great deal. You can get generally puts and calls for a whole lot less as that premium gets sucked out for the weekend. Question, did Livermore say that stocks that can get over $100 share will go much higher? Does it still apply today? And the answer is going to be revealed after this break. Yes, he did say it, but there is a difference between his time and our time with the way stocks are sold. We'll talk about that as we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we had a question in the den about Jesse Livermore actually talking about what is going on with stocks that go to $100 per share will go higher. And there's a pretty good indication that that was true during his time. But you also have to know that during that time, the stocks were sold at a par value and then traded off that par value up and below that par value. And I can't say that it's exactly like trading a bond off par value. And of course, I wasn't around in 1925 when they changed it to actually trading at all kinds of levels. But there was a great deal of that where stocks were already $80 on the day that they, started trading with a par value of 80, and they may be trading at $120 or something. So I have a feeling that you couldn't really do apples and oranges. I did see many studies over the years in Stocks and Commodities and other magazines like that that do show one huge statistical inference, and that is a stock that goes to 90 for the first time will go to 100 about 95% of the time. And I think that's your better bet if you're trying to look at some kind of indication out there, is the first time to 90, you got about a 90% chance of getting the next 10% out of it. Not a bad trade. The opposite is probably the highest correlation to anything, and that is a stock that gets a reverse split. I think it also has 90% chance of going bankrupt in the next 3 years. At least that was several years ago. I don't know if that's changed, but that was a number that had been around for a long time. And they test it every once in a while. I'll see an article about it. But that's also pretty good. What else do we have going on here today? Oh, wanted to get into some of these stocks that are moving today, so we'll get to those check in with the indexes here real quick, since I didn't look at them in a few minutes. 2076, we're up 24 points on the S&P cash. Let's see if there's anything else out here. Of course, the most, I don't have a, do I have a chart? I don't have a chart up here at the moment for it. I do have a quote, and that is the dollar index. If there was one thing that could scare the bejesus out of you in Halloween season, it's got to be this dollar index. It is up like a monster. And if you look at the patterns the way I do, I suspect that we are looking at $100 on the dollar index probably in the next few weeks now. It has decidedly busted out. And for all I can tell, I guess I'll get the numbers tonight on exactly what the volume was in this. But to me, this thing broke above the 96.30 level that has been severe resistance for a while. And basically, we're at the next level here, a break above pretty much this 97.10, 97.15 area we're right at now would suggest that we go to 98 Monday or Tuesday. And I don't know if that last $2 is going to come as easy as these last 2 or 3 have, but weren't able to go down and test the bottom. And of course, then we got the news from Europe yesterday, started to run, got more news about huge amounts of cash being thrown around by China. And of course, the next move out here. But if I was a betting man, I would say $100 on the dollar index is probably 80% likely that we now get that test that we had before of 100. And that's got to put the kibosh on a lot of the upside for any S&P international stocks. For a while, most of these companies will be able to resist and hedge the huge headwinds of it. But those hedges eventually run out, and it's hard for me to see that this does not portend a strong dollar for a long time. The only thing that would negate that, of course, is that the gold index is not really off today. It's off a little bit, just a couple of tenths, which would suggest maybe there's something else going on out here, but we'll have to see. I'm wondering at what point the dollar index, if it goes up, actually sees any pressure on the actual gold itself. Of course, gold miners, at least the juniors, off, a few percent out here today. To them, I guess that's a great deal more of a problem, and especially when they're in denominations outside the United States. Maybe Tom O'Brien will talk about that and the new strong dollar and what that means to various miners around the world. He'll be on next. I'll be on with him in the 4 o'clock hour for Tech Insider. We'll get to charts after this short commercial interruption.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we're back to the top of the hour, or the bottom of the hour, up 23 points on the S&P cash. Volume's pretty good, 2.7 billion shares, but nothing like yesterday. So up on a little lighter volume now. But you would think, you get this close, you're probably looking at 2,100, and maybe we get that. One of the tigers in the den, Terry, brings up that the Fed meeting and announcement is out next week, Wednesday at 1 p.m. I suspect we'll probably have a little bit of action on Wednesday. But before I get into charts, though, somebody said that they really didn't understand what I said yesterday, and that is, okay, we got a Fed meeting. They're going to talk about raising rates. They've already basically said they won't raise them. But if they come out and say that they'll raise them, doesn't that instantly take the dollar index to about 100? I figure there's got to be at least 2 or 3 points in there only if they talk about raising. Even if they don't, it looks like the die is cast for a stronger dollar. But is there any chance that Yellen could actually raise now? Because if she did, of course, the dollar will run through 100, I'm pretty sure. And then that, of course, sets up exactly the problem that no one wants, which is a declining market that she cannot handle. So my guess is that we are either stuck maybe 97, 98 through this week. If she mentions any real rate hike, says you're going to do it before the end of the year, doesn't that absolutely put the dollar index back over 100? I think at least it tests it. And if she actually says anything, I think that pins it to that 100. So I think we're going to have an incredibly volatile week coming into Wednesday. But the one thing is, if they talk raising, watch that dollar index. It will cream just about everything in its way. And that would be it. What else do we have going on here? Did I have anything else listed? Wanted to look at EMC real quick. Everybody keeps telling me that all the money is in place. Of course, and the buyout would be $35. And I still don't see it. This stock is trading at $26 today. But every morning I turn on and we get the talking heads. Actually, not a bad talking head on CNBC. He's the financial guy in the morning. What's his name? Brown-haired guy. Actually, straight shooter. I'm just not sure that he's actually checked out and seen forms that have been signed that Dell actually does have money. Because you got to think, if they're buying AMC at $35, and that's the deal, that the stock would be close to $35. I just don't see it, don't know why, and can't see it. Now, of course, a lot of movement after the news that there will be more accommodation in China. And Wynn Resorts actually a little bit of a pop out here on that today. Where's my Wynn, W-Y-N-N? Let me add that real quick. Up 7% as we speak, 67.71, up $4.54. And kind of a nice little turnaround here, but only based on that there will be more juice going around the Pacific Rim here. In the meantime, what we don't have is any volume. So the question is whether it will actually make any difference. They are going to talk about giving a lot of money out, but where these people in China want to spend it on cars? No, can't do that. Want a flashy new watch? No. Very expensive wine, and we don't want you doing it on that. Additional houses? No. So there's all this cash, and because, of course, they have a central planning committee, they want everybody to do what they want them to do, but that's not where they want to spend the cash. And that comes through that. But nice pop today. Just no volume in Wynn Resorts and some of the others. Other stocks of interest to you, THR, had a nice little bounce out here today at 581 as we speak. You could almost say that it had a little bit of a reversal out here. Nothing really to hang your hat on, but some of these stocks that have done nothing but gone down, finding a little bit of sand underneath their keel so that they do not totally sink. You had 1 million shares yesterday. Again, these bounces are rather tepid, like most of the market that isn't part of the FANG group. United Therapeutics up a bit, but not a lot of juice. Of course, to the downside, I've been saying that this is the rich man, poor man market, and that is either incredibly rich or incredibly poor. If you're in retail and making retail products, life can't get much worse for retail. Skechers, SKX, down, took a total beating down to $29.55 today. Now trading out at $30.17, off $16, off 30, almost 35%. And that's, we get a lot of these high-tech companies that do well, and we'll get to Microsoft in a minute, but it's kind of disconcerting to see that so few stocks are getting all the love, i.e. the tech stocks and the big tech stocks, not even the less expensive tech stocks. But a lot of these companies seem to be falling off a cliff on earnings and, of course, down on huge volume. The next stop for this thing is a gap. That gap happened on the 23rd of April. With the 16.8 million shares, you got 25 million shares today. It's already kind of into that candle today. A little bit of bounce back, but the first probably even semi-support is in that 25.25 to 27.50 range from that gap back then. And if it doesn't stop there, it can go all the way back down to probably about that $21 or $22 level that takes you back to November 28th of 2014 and September 16th of 2014. I probably should have known something. We had a big short on Western Digital in the Tech Insider. Did I talk about that already? I don't think I did. Well, maybe we did. Anyway, had a nice short, concluded it yesterday in the Tech Insider. But one of the things that really is standing out as, these stocks start to get cooties. There's just no stopping them when they go much lower. But a lot of these gaps and support areas don't even seem to be holding up in the face of what everybody should be telling us is going on. Microsoft, MSFT. Kind of very interesting to listen to the earnings call on this one. This thing's got you don't want this thing to open up lower, like $2 lower on Monday, or talk about an abandoned baby. Up here testing its highs from 1999 or was it 2000, when the judge came out and said, you kind of a monopoly with that Internet Explorer business. And we're going to keep an eye on you for the next 10, 12, 15 years, which they did just out a few years ago from under the thumb of the Justice Department and the Anti-Trade Commission and everybody else and everything. And of course, it's taken them almost 16 years to get back up here for Microsoft. The stock took just a horrible beating on that whole issue, but we're back up to it today. But boy, do you have to watch out on this. As long as you don't get a huge one-day gap fill or gap back down on Monday, that can make a pretty horrible pattern. I've been very high on Microsoft for several years. I thought that they were starting to do just about everything right. I was unprepared. In fact, options were saying that this stock was going to go up or down $1. So somebody made a lot of money on the options. I didn't see it, couldn't hear it. Actually, when you start and look about what's going on at Microsoft on their earnings call, it is kind of very interesting to see how they made all that extra money and what they're going to do to make more. But they are making it work. And of course, giving out a lot of new versions of the operating system so far has seemed to pay off. We'll probably talk more about this in the Tech Insider Hour with Tom, but I don't know what else you can say out there. All the new products are probably going to start shipping, what's today, the 23rd? I think they start shipping next Tuesday, if I'm not mistaken. Is that Tuesday the 26th? 27th. All their new laptops and their new notebooks come out the 27th. Saw a lot of reviews around them. And of course, they were handing out early prototypes for reviews. And the only comments that they thought the products were very good, other than the fact that the prototypes seem to have some structural issues. And hopefully the shipping versions do not have them. But just to be safe, I don't think that there's any reason to be a hero out buying the new and first tablets or notebooks from Microsoft next week. I might want to wait for a couple of weeks until they get the things settled out. Maybe some manufacturing issues may be solved by the time they actually get to the stores next Tuesdays. But a lot of the reviews said, hey, great product. After I used it, this button broke and this other thing broke. But, just handmade items like that do tend to have a tendency to do that. But most people, at least in Silicon Valley, that are into reviewing a lot of the new hardware products from Microsoft are saying, hey, give it a little bit of chance, a little bit of time out here to take a look at it. Now, one of the things I've been looking at is a pattern developing maybe from Amazon. And that pattern is all about them selling off after hours, getting a nice bounce in the stock, and then seeing a great deal of that over the next 3 or 4 days come back. We can just look at the last time this thing had a rocket back up. That was the July 24th high. Thing went sideways for several days, then went back into that August 24th low, congealed, came back up here. One of the things you can also say is look at the volume from the July 24th high, which was 21 million shares, and the volume so far today, which is 8.3 million shares. We are not breaking out with higher volume on Amazon. And I think if you actually look back even farther, you've had some big volume days. This thing has gap, but what this does set up is a lot of 3-gap plays that are open now. This one kind of closed the last one, but this actually, we've been talking about this for a while. This does open up the last gap for Amazon on a 3-gap play. And I don't know if I have the guts to pull the trigger on it, but it's certainly acting like it has before, which is it gaps up, sells off a lot the day that it gaps up, comes on back down and fills the gap. At least that's what it's done the last time. And I'll watch and see if this does not start a pattern with the way Amazon trades in the near future. And what do we have going on out here? Crude a little bit lower today. Again, the probably the most interesting thing to me is what happens on Monday when we come back. Let me get this out of the way here. I don't know why this popped up. What happens to crude on Monday? Of course, we're what off 70 cents, 44.68 on the current contract. But if we went to 98 on the dollar index, that would pretty much give you $42.50 on crude. And maybe the chance of seeing that $30 crude number come back in also this week, going into the Fed meeting, would be incredibly interesting. And I know some people talking about natural gas and it getting crushed. But I think we're looking at a week that will be characterized by how that dollar index trades. In fact, I was watching the VIX and the S&P and watching the dollar move. And every time the dollar moved, we saw everything else kind of flow from that. It seemed like it was leading most of the morning until about noon. And I'll be watching for that pattern to pick back up again on Monday. Do we have anything else? Just a little pin action from Facebook. Thought it was kind of interesting to see it. We saw it after the hours last night that it kind of moved up with the rest of the companies, even though it was not reporting. It also has a little bit of a doji out here that could be on gap down on Monday, a island reversal. So a lot of stuff to be watching for when we come back in on Monday. But the most interesting thing would be a gap down on this or the entire markets and start seeing some of these island reversal numbers. Probably nothing more than Microsoft look like the most interesting. A 3-gap play on as a possibility on Amazon, although I'm not predicting these. I'm just saying that these are opening up some incredibly interesting charts for us as we come back on Monday and wait for the Fed announcement. It, of course, is going to be on Wednesday, so you can look for Tuesday afternoon for the volume to go light until we get through the announcement on Wednesday. Be back in just a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back, and we got a little bit of time. Let's go ahead and look at some of the stocks that I've been watching. Let's see, test 22nd. That's got to be right. Got to get, anyway, oh boy. I thought there was a lot more out here that I was looking at. I wanted to go back and look. Baidu is one of those other stocks that have bounced on the China news. A nice little bounce out here. This thing had been up against resistance, which was that August 28th, 2015 high. And you know, you had 8.4 million shares. You got a little pop out here and gap up today on 3 million shares. So not a lot of people saluting when they raised the flag out here on these China stocks. So I think this is still a work in progress if you really believe that all the cash is going to flow like the land of milk and honey. But you're back into this really this kind of, I don't know if you'd call it a right shoulder, but certainly a shoulder that happened somewhere about mid-August all the way down to the 21st of August before it fell apart on the 24th of August. So we're back into that area now. Now, those days, 5 million shares, 7 million shares, 6 million shares, some pretty decent days. Now, this is a Friday, so we'll give it just a little slack. But come back Monday, you should have some pretty good stocks in these Chinese, or volume in these stocks like Chinese Baidu, and of course the earnings on, was it Sohu on Monday? So we've got a lot going on in those. Let's see what else I've got out here that I wanted to look at. C-Trip, another one of those. A little gap on it. And a little better volume in this one. You really were looking for the volume of September 16th. That was on 4.9 million shares. You're through it today with 3.3 million shares. So maybe you get the same volume. It probably doesn't look like you're going to get a lot more than that. And if you look over on the left-hand side of the chart, you really, on this down day of the 11th of August, had 4.3 million shares. And, you just have a lot of resistance as we get back into these levels. But, these little dojis out here are going to be very interesting come Monday if these things end up being abandoned babies. So you want to look on that. What else do we have in my list of stuff that I wanted to get to? ICE. Intercontinental Exchange. Wanted to see how this one was doing because it had come up with a lot of volume yesterday, but still very light. Yesterday, it had 631,000 shares going against 1.1 million shares. And that was, 246.39 on that date, August 20th. So today, 316,000 shares. Again, you get these little kind of hanging dojis. The hanging man is what they call that one. But energy, not all that exciting on the way up. In fact, if you kind of look at these from the candle of the 29th of September till now, you can kind of draw a line just how the volume has really come out of this one. And that may be because of the NASDAQ buying second market and some of that. We talked about it yesterday, trying to get in on all those unicorns, the billion-dollar startups that are not publicly traded, but actually starting to trade stocks that aren't even public yet. And maybe it just feels a little left out, but up here on very light volume. And we'll see how these and other things develop on Monday. In the meantime, sell when you can, not when you have to. And we'll see you Monday, same bat channel, same bat time, and in the 4 o'clock hour with Tom O'Brien, who's coming to you momentarily.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.